Hello traders, Stacey Burke from Stacey Burke Trading. Today we're just going to go over a couple of the last days on the 5-minute charts on the British pound. Now, a couple of things just to reinforce some really basic ideas about how to approach the market, to look for simple support and resistance setups to help you identify areas to sell high or buy low. One of the key things is the timing, and timing has to do with the opening of the London market and the opening of the US market, which is when we see the heaviest amounts of volumes and liquidity enter the market. Now, we're looking at the colors that are on the screen here just signify the pink is Asian session, the yellow is the London market open, and the green is the US market open. And then of course the green yellow is the overlap of the US and London markets. This is just a free indicator off the internet, which you can Google. It's, I believe, called the iSessions indicator. You can set up your own times on there. I just use it to look for some easy visual identification. The market just marks the highest area traded during that session and the lowest area traded during that session. So obviously as it's trading live, it'll be moving as the market goes higher or lower. But once we have Asia done, or towards the end of its session, I just typically mark off the low area of the market and the high area of the market. Now as we head into the opening of London, I will typically, in this case, look for an area that would be midpoint roughly, because we're in that upper half, that could be support. And here I see on the left evidence of institutional buying, and then where that's become support. So I'm just going to put that in there as a possible area of support or resistance that the market may trade off of. Now, what I typically will look for, I use hourly charts as well, so I look for the rollover of the hour to be an important area of change. And you've heard me say before that often between 2 a.m. New York and 5 a.m. New York, you will see the market establish a potential high or low area for buying or selling that will last throughout the rest of that session. Now, in this particular case, right off the bat, we saw the market auction higher and then come back into the trading range and auction back down lower. Now this happened to be at the rollover of the 3 a.m. candle, and the market then again came back up. So now we know we've got an area of potential support and resistance formed. And I'm just going to move that up a bit. We've got an area where the market held up, broke out, and then retested. And then two-sided trading was evident up here. So if you're going to sell, look to be selling where there's been selling before. Look to buy where there's been buying before. Now going into that market, the bias was that there was some order flow in the buying direction. We see that the buying is a bit more aggressive than the selling, but that sellers are definitely coming in around that 41.60 area. So if you're going to be buying, look to be buying somewhere below the 41.40 area, in that area, which we saw the market then explode through, take out the sellers, and continue to auction up. So there was 30 to 50 pips tradable in that area for traders before we headed into the early part of the pre-open of the US market. Now once that US market opens and we start to establish support and resistance, I will then do the same thing. So we'll mark off the London highs, and then we also have our potential area where the resistance will now become support. As soon as that market into the open of the US auctions down, I would then move my resistance level down here. We're looking for evidence that those sellers that were here originally are now going to become buyers, and we see that. And we see the market retest that again. As soon as we see the market reverse, we want to see some evidence of two-sided trading in this area, which we do. Once the market has established that, we would look to establish a long position that's going to retest the highs of the London session. The market did that. It exploded north and gave us somewhere in the range of 30 to 40 pips a gain that was tradable. And again, all we're looking at here is just some simple support and resistance levels. Really simple. So then if we look at yesterday's, I'll just remove that. If we look at yesterday's market, again, we'll just look at our Asia high and low. Looking, that first yellow candle is our London open. So we'll put that right here. Immediately the market auctions down and we see order flow evidenced by those bearish candles. What you need to pay attention to is any big bearish candles that could potentially have stops above them shouldn't break down. We see that buyers came back and erased that selling strength and auctioned back above the open of the London session. Once the market did that, bulls were able to establish positions and look for this area to be retested. The market did that. It proceeded to auction sideways into the US Open. Bears entered into the market, retested the old support, then auctioned back up into that area around 41.95. As soon as we see that retest and then this failure, bulls were able to establish positions with a reasonably low risk reward in terms of risk to reward, and then position themselves for the market to again resume that upward drive. So again, just looking at simple support and resistance, looking for retests of highs and lows. Stay with the original strength unless you're finding that the market has given you a failure and a good reason to enter that market where you're selling high or you're buying low. Hopefully that helps traders. Again, keep it simple. Look for those opening drives. Look for order flow. Look for support and resistance levels. Keep it simple. Look for institutional candles and stay with the trend. Hopefully that helps traders. Have a great day.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined and may the markets go with you.